Good afternoon, Scott Redler, T3Live. Welcome to today's recap. So today was a whole lot of what? Nothing. A little rangy day. Looked like the futures are going to open up, and then all of a sudden GDP came out. The revisions were lower. Took some of the energy out of the market. Did feel like they tried to have the fix in to try and get the market up a little bit. We've been down 5 days in a row in the S&P. Typically, you have a day or two up going into Thanksgiving, so the forces of will could get everyone shopping and feeling good for the holiday. And maybe we're in that week of a market that's not even the case. So many things going on out there, so many problems, hard headlines to deal with. And, if the action over the next few days, if they can't rally us even tomorrow and then Friday, and we hold this lower level, we're going to take another discount. Not a lot of stocks filled the gap. I talked some strategy. I said, I was long the spiders versus the low. I want to see what stocks could fill the gaps in order to figure out how weak certain scenarios are, or whether or not we could get something a bit more to the upside versus just a feeble type of attempt, which we had in a lot of the indices. So if we do a quick run through, here's the spiders. If you take a look at the spiders, you will see, talked about this recent pivot. The pivot was 118.65 from yesterday's low. And at first we opened up, went basically to it, didn't really break below it. And then you had that news from the IMF at lunchtime. This is why it's a little difficult, guys, because you look at something like this in the 5-minute chart, the market looked as if it was going to break down, break below the lows. You had the news come out, and it went fast and furious, and this was hard to catch. What at least the market did give you is it held in there, because I was actually trying to buy some spiders. I was trying to get involved right around here. So this was decent. This held up. This showed you that perhaps you could get a continuation moving. And as an active trader on a micro version, if you missed this, you could have bought the 1940s, 1950s, and then maybe added above 1980, and then you had a quick move to 2010. Then if this was a daily chart, I would say this is a red dog reversal, a day to take notice, but here is only a bar to take notice, where it pushed through, closing the lows, and never came back really above it. And then this was, I guess you're out, but I wasn't here, so I just put stops in. Then it came down pretty hard to where it was holding, and then really the trade came off the table once it broke this area. And then, for the rest of the afternoon, this was really one of the only tradable moves to at least the upside for the day, and it had to happen from 11:30 till 1:30. So it happened when most people think that most things don't happen, and typically I'm not here for that. And then traded, pretty sideways into the close, and then after hours, it's now trading around 1880. So we'll see what happens tomorrow. But bottom line is not a lot going on. We do have two little points of reference to trade against. If it breaks below this area, you have this gap and go. If you remember from back here, this was important earlier in the rally back in October. It's not as important now, but it's another point of reference. The gap would be getting filled right around on the spiders. This would be about 117.25. So 117.25, it starts at 117.65. This is your next area to watch if this 2-day pivot doesn't hold. So I know a lot of people were leaning long. I was one of them that we would resolve to the upside. But there was a camp that was like, why would we resolve long? Why would we have continuation? What's going on in Greece, Italy, Spain, the France potential downgrade, yields going through the roof, the super committee becoming a bunch of junk, and just GDP lower, and it just seems like there's no good news. And once all these austerity measures kick in, then all of a sudden, then there's a little slower growth because people are going to retire later, they're going to get less in their pensions, and there's going to be layoffs. So a lot of bad news out there, a lot of news that we tried to ignore, and for a while it was profitable. If you look at the chart, the market ignored the news during this entire ascent, all the way to the highs. Never pulled back more than 25% until finally it changed here, and then again here. So now we're in a tape right now. I feel like a lot of people are flat and flexible, so that's something to be thankful for. But don't ruin it by overtrading. And it's really hard when you're buying for it to trade into the gap, and then it fails and goes to the low, or you're trying to trade it to break a low, and it comes back up and you see the news. So at this point, just do a little less. Some stocks gave you some opportunity. Apple was something I was on earlier, one of the stocks that actually rewarded me, and for those that stayed with it for relative strength, you did pretty well today. Here's Apple, just shows you how you could time it. It held above the 200-day, and this stock actually went into the gap for an extra trade, which was above this 371.69, which was on the price point sheet, and closed somewhat strong. So I think that there is some room here, to this 381, and maybe even a little bit more room to here. So if you're playing this for a Turkey Day bounce into Friday, this is probably the easy part of the move. This is what I would sell before you try and figure out what the next macro trade is here, because right now it's still broken. But on a macro level, it's holding here by a thread. It's still above the 200-day. It still had a nice move for the year. Yes, momentum left when it broke below this area, which was a great cash flow short for a lot of us. And it's just now just a scalp. If you're in it for the long term and you believe in Apple, which at this point it's a little questionable, just know that that trends can change and stocks do have cycles. Remember Microsoft, remember Dell, remember Intel, remember Yahoo, remember Taser, remember I can name a lot of them, Netflix, GMCR. Not saying Apple's one of them, but just don't turn a blind eye. At this point, that island top is still controlling it. On a micro level, it was much better to be short than long over the past 2-3 weeks, and now we have to figure out, if you go to the weekly, we'll take a look, what's going to happen here with this uptrend that's been in place for a while. Let's take a quick look here. It's still above it. I haven't done this, so I'm just looking at it actually right now from this. Actually, this is can't really even draw it from here if that's how. Yeah, you know what? I'm reaching right now. I'm also tired, but anyway, you just want to make sure this uptrend doesn't change. On a micro version, I guess it's right here coming into it. If it were to break this, you could then see a move down to perhaps bigger support, which would be around here. But we'll see. The market will have to get really pressured for that to take place. And then if you go to Amazon, frustrating for a few of us. Chart's broken, but it finally did a little bit of a reversal. Traded through the low of Thursday or the low of yesterday, whatever yesterday was, came back above pretty strong. Now we'll see tomorrow. Maybe you guys will get another trade, or I can get another trade where it trades into this gap like Apple did and gives you a cash flow to here or maybe even to this 202. So if you're long it overnight, I would say that's a setup that has a high probability. And then tomorrow you can get an add-on if it opens up a little lower and then trades through the highs of the day and fills a portion of this gap. But it's tricky. As far as some groups, let's take a quick look to see if any of the ETFs filled the gap from yesterday, because the spiders could not. So let's take the AGs. The AGs were sort of strong yesterday. Did it do anything extra special? Not really. At least it pushed into the gap where the spiders did not. Let's take a look at the OIHs. Nothing really. Didn't push into the gap. It's still being controlled by it. It made actually a lower low. It went below yesterday's low, still holding above this this little pivot. So it could build a little bit of a lower level. We all know when it broke this wedge, the sell signal here. Google, not much to talk about. It gave you a few little intraday trades, but at this point, it's barely hanging on to this earnings gap. If you guys remember here, it's still in the game. It gave us a nice trade, if you remember. It feels like a decade ago when it broke above this 600. We had a nice trade, nice 2-day trade. And then once it broke this upper range, that was your sell signal 1. Or when it broke this prior breakout, this was your other sell signal, and for it to lose this upper momentum above the channel. And now it's back testing the lower end of the channel. To me, I'm not interested. For a while, I'm going to give it some more space. Baidu, not much to talk about either. At least Baidu filled the gap. Gave you a trade, open lower, traded through the high, filled the gap, gave you some cash flow, still very weak, still very broken. You had an ascending channel right here, and then you had a nice little wedge. So you had two different patterns to watch as far as direction, and it was to the downside. Take a little bit more of a micro view, you could see it. Still failed, could not get above this big resistance area that controlled it. Netflix, very choppy. Some guys made money long, some made money short. I think Evan made some good money off the open, and then Sperling made money short there, closed near the lows. I just think it's an avoid unless you're going to trade it on 3-minute charts. And on the 3-minute chart, it on the open acted decent, right? Because what do we like to see? We like to see gaps try and get filled. It gave you some sideways action. So for a cash flow trade, once it went above 70.50, it was a pretty nice move to 74. So for cash flow, there you go. Then it gave you, I guess you can call this a wide range bar that engulfed the last bar and this one. This could have been your way out. And then really ever since then, it was a short. And it's really hard to see also. But at least I was there for cash flow, something to do in this market. I guess you could also say that from here it was getting a little tight, and then it seemed as if it could go again, and it wound up breaking to the downside. Okay, so that's when the trend changed and didn't see the light of day. So just a little frustrating, I'm sure, for anyone that played it for this quick move and tried to buy a dip. It just didn't work. It held higher, but little relative strength versus the futures, and then broke to the downside. Goldman Sachs, one-day wonder again, just really weak. I made a little bit of money off the open, and then it got choppy, and then once it broke this area, I stopped trading it. But if you look on the daily, it's horrible. Here's your 2-day little window here. You guys remember we talked about this uptrend, broke to the downside, then we talked about if it broke 98, it would show us weakness last Wednesday, and now it's just kind of dribbling back to these old lows. Really non-eventful type trade. I don't think it's a macro long at all. I think you could chop around in it, but it's definitely not easy. It's very erratic. Bank of America, I think, closed on the lows, or now it's approach. Wow, look at this just dribble. Horrendous. That's why we respect trends. We traded it, off that October low, and then, once it did the same thing as Goldman, right, at this little wedge, you had to get out of the way, 650. You could have saved yourself $1.30 or so. Or, and they could have done it the other way too. This was the last time it broke, this mini trend, and then this was, I guess, the excitement that gave way, and then it broke. You had to get out of the way. It was also one of the first few stocks that actually that broke the 38.2% retracement before the next. I think it's Moynihan on the phone. Let me check. All right, I'll take it after. He's upset. I'm not talking highly about his stock. I'm kidding. It wasn't him. It was my mom. They're at the airport. They're coming in for Thanksgiving, so that'll make me smile. Let's see what oil did today. USO. Take a quick look here. Not very compelling. You guys remember this was the day I left for Vegas. Got short the SCO. Nice little short. 3-day move. Just showing you that you can time these things. Was good. Yesterday gave a reversal. Today gave a little bit of follow through. And now it doesn't look so compelling. Some people might actually short if we were up tomorrow, but we'll see. I'm going to avoid it. Gold. Really an inside day. You couldn't really do much with this, right? It closed into support. You really had to take it home, which was hard to do because a lot of things didn't look good. This was the last time it broke that wedge to the downside, and now it held in. So, they're talking all day long how strong gold was, this and that, but didn't really give you much intraday opportunity. This is just an inside day. So if you long gold with a long thesis, just stay the course. And really that's it. I'm sorry I have a little lack of energy. Just was one of those days where it was really easy to lose. If you tried shorting the bottom, you got hurt. If you tried buying after things looked good, you got hurt. It was very selective type of random activity. When things get random, you have to pull back. When things don't follow our set of rules, and usually they do when there's heavy volume or decent volume and things make sense, we have an edge. Right now there's really not that much of an edge. As I said this morning, it seems like people that beat the benchmark and are up 5-6%, they're done with the market. They have their bonuses booked in the bank and they look great to their clients and to their higher ups. And then those that had the pent-up energy trying to keep up with the market because they missed the move, they didn't trust that move from October 4th to 1292. We're no longer up 3-4% and in the cards to go up 6-7%, so they don't have to buy every dip and figure out ways to make money. We're now off a few percent, and they're probably off a few percent, so they're in line. So to me, that equals a lot of uncommitted money, a lot of just low volume moves that could happen at times, but you can't really trust them because no one's behind them to support them. So what does that mean? It's a complicated time of year, even in these holidays, when typically between November and January, we make a lot of money. Fourth quarter happens to be one of my most profitable quarters. And at this point, I don't know if that's going to be the case. So I'm not going to push it. I'm not going to push keys. I'm not going to get overly frustrated, which I did a little bit today. So I'm going to try and hold that back. And you guys should follow suit. Sperling's been the least active than I've seen him all year. So if he's not holding 12, 14 positions like he's normally doing, trying to maneuver the markets and he's in light, follow his lead too. So just follow the leads of everyone that is trying to, give you guys strategies to make you money. And at this point, less is more until we get more data and we get more clarity. And it could be to the downside, or maybe we hold this little level and we get a move into some of those gaps, and it could be tomorrow or Friday, but that we'll cross that bridge when we get there. But most importantly, just realize, coming into Thanksgiving, there's a lot to be thankful about. There's a lot to look forward to. And one thing I said in my note today, if you guys don't read it, my grandma said one thing when I was a little boy. She said that if money could solve all your problems, or if a check could solve your problems, you really don't have many problems. There's a lot of problems out there. Everyone here is in a very good position to enjoy life, to maneuver the markets, and just cherish the small stuff and make a nice turkey and have the stuffing and mashed potatoes, and don't sweat the little things like a day like today that was a whole lot of nothing, because we're going to have these days, and as long as you don't beat yourself up on them, just move on. So Scott Redler, T3 Live, the recap. See you at the morning call. Have a good night.